Hello viewers, Hasham here. So this video is the continuation of the last video. In the last video, I have completed the perquisites which are taxable to all employees from 2 to 8. Now continuing from the 9th perquisites which are taxable to all employees. So before explaining all these perquisites, take a screenshot of the points, then I'll explain all the points. Come on, ninth one. Gift given by the employer. Sometimes a gift will be given by the employer to the employee or their family members. Then what is the provision of Income Tax Act regarding the gift given by employer? Here I am going to explain you. First of all, during the previous year, if any gift in kind, remember in kind, any gift in kind is received by the employee or his family member from the employer is a tax-free perquisite up to the value of 5,000 and the excess amount is taxable perquisite. So Income Tax Act says if any gift is given in kind by the employer to the employee or their family members, so if the value of the gift is up to 5,000, tax-free. Any value which is more than 5,000 is taxable. For example, if the gift is given valued at 40,000, 40,000 worth of gift is given by the employer to the employee. Income Tax Act says up to 5,000 is exempted. The excess will become a taxable perquisite. Now, the gift given to the employee or his on her retirement is also taxable perquisite. Normally, at the time of retirement, some gift will be given by the employer to the employee. It's a taxable perquisite. And the employer may present the gift either in cash or in kind. The gift may be presented in normal course or a ceremonial occasion. It is not necessary that gift will be given in the normal course of occasion, but even on ceremonial occasion. Example, birthday or marriage day or annual day function. These are called ceremonial function. The gift may be given in normal occasions or may be given in ceremonial occasions. It's a taxable gift. If the employer gives gift in cash or which is convertible into cash, then it is fully taxable. The basic exemption of 5,000 will not apply. Remember, very important point. This 5,000 rupees basic exemption is given only when the gift is given in kind. If the gift is given in cash, then fully taxable, no 5,000 exemption is applicable. Next, if the gift is given in kind, then up to 5,000 is tax-free and the excess is taxable, just now I told. If the employer gives the gift to the employee for achieving a target, sometimes the employer will fix the target to the employee that if you made the sales up to rupees 5 lakh, we will give the gift. Sales target 5 lakh. That means if you achieve the target of 5 lakh, we'll give you a gift of 1% or like that. So any gift given for achieving the target, it is a fully taxable perquisite. 5,000 exemption will not apply. Will not apply. That's all. So these are the provisions regarding gift given by employer to employee or family members. Now expenses paid by the employer on credit cards. Sometimes the employer will give the credit card to the employee or their family members, or the expenses on credit card are paid by the employer by using the credit card by the employee or the family members, and expenses are paid by the employer or reimburses by the employer. It's a taxable perquisite in the case of all employees. Next, use of movable assets. Sometimes a movable assets belong to the employer, but this movable asset is being used by the employee or their family members. In that case, what is the taxability? Income Tax Act has given the provision. If the employee or his family member uses any movable asset belonging to the employer, it becomes a taxable perquisite to all employees. First point, it is clear. any movable asset which is belonging to the employer but it is used by the employee or their family member, it's a taxable perquisite to all employees. And the movable asset may be washing machine or furniture, etc., but does not include computer and laptops. Computer and laptops are also movable, but Income Tax Act has exempted. That means when computer and laptops are used, it will not fall in as a taxability. Then the value of the perquisite is, if the movable asset is owned by the employer, then 10% of the original cost of the asset. 10% of the original cost of the asset. If the movable asset is hired by the employer, sometimes the movable asset is hired by the employer and given it to the employee. In that case, whatever hire charges paid by the employer is the value of the perquisite in the hands of employee. So these are the rules regarding movable asset. The last one is sale or transfer of movable asset. Sometimes a movable asset is owned by the employer, but it is transferred or sold by the employer to the employee at a concessional rate. Then whatever the concession, whatever the benefit the employee gets, it's a taxable perquisite. The provisions are, when the employer owns a movable asset and it is transferred to employee or family member, if any benefit accrues to the employee, then such benefit value is treated as perquisite, which is taxable to all employees. First of all, the asset should be owned by the employer. And this owned asset by the employer is transferred to employee or the family member. And by purchasing this asset, any benefit accrues to the employee. That benefit is a perquisite, taxable to all employees. Now, how to calculate the value of the perquisite? Here, example is given, original cost. Original cost of the asset. For example, some furniture is there. The furniture value is, let it be 1 lakh. And during last 5 years, depreciation provided 40,000. 40,000 depreciation provided. The 1 lakh rupees original cost, 40,000 rupees depreciation provided. The presently book value of the furniture is 60,000. 60,000 rupees is the book value of the furniture. And it is sold to the employee for 10,000. The employee has paid only 10,000 to the employer. So deduct 60,000 minus 10,000. 60 minus 10. 50,000 is the value of the perquisite. And this 50,000 is taxable in the hands of the employee. Now depreciation is calculated. Here depreciation, normal depreciation we have to deduct. So what is the rate of depreciation and what is the method of providing depreciation? Here specified by Income Tax Act. If it is a computer, suppose if computer belongs to the employer and employer has sold the computer to the employee, then rate of depreciation method is RBM. Reducing balance method is the depreciation. Reducing balance method, rate of depreciation 40% for computers. This information is provided by Income Tax Act. You have to remember this. While doing problem, all these points you have to apply. So for computers, RBM method we have to apply, reducing balance method, rate 40%. For electronic items, again RBM and 40% is the rate, just like computers. Motor cars, if motor car is transferred by the employer to the employee, then in that case, the rate of depreciation is 20%, method is RBM, reducing balance method 20% rate. For any other asset other than these three, any other asset, straight line method, SLM. SLM stands for straight line method and the rate of depreciation is 10%. So these are the rate of depreciation to be applied in order to calculate the value of the perquisite. Now, here electronic items. Electronic item means computers, digital diaries, printers, but does not include household expense appliances like washing machines or mixers, etc. That is a clarification given by Income Tax Act. Depreciation is calculated for each completed year of service and any fraction period of the year is to be ignored. For example, if the asset is used for 2 years and 6 months, so ignore 6 months, calculate depreciation only for 2 months, 2 years, sorry, 2 years. So any fraction year should be ignored for calculating depreciation, only completed year should be taken into account. That's all. So we have completed all the provisions regarding taxable perquisite in the hands of all employees. So far we have discussed nearly 12. Yes, 12 perquisites I have explained. These are the perquisites which are taxable in the hands of all employees. In the next video, few problems will complete on these perquisites. Then we'll discuss about those perquisites which are taxable in specified cases. That will be done in the next video.